For over a decade now, the first exercise that we do when we work with a new client, and actually this is the first thing that we do on the Leading Growth program, is all focused on the fundamentals of business growth and understanding your 6 business growth levers. So we're going to work through these collectively together, and what I'm going to do is I'm going to make them really practical, bring them to life about how you can tailor these to your business and you can get instant value even from this short session that we've got today. So the first, revenue, profit and cash. If we had a room full of 100 entrepreneurs, business owners, and I asked them the question about how's business, how big's your business, I guarantee one thing, 99% of the business owners in the room will quote to me a revenue number. They'll say, Royston, I'm a £500,000 business, I'm a £1 million business, I'm a £1.5 million business. The one really smart, focused business leader in the room will say, Royston, I'm a £1 million business making a 66% gross profit, a 25% net profit, and I've got positive cash flow of £150,000. That's the smart business owner, because revenue, profit, cash. Revenue is the vanity line, profit is sanity, and cash is reality. Most businesses don't go bust because on paper they can't generate revenue and they can't make profit. They go bust because they run out of cash. So my challenge for you is measures that matter, and you'll hear me talk that language a lot. Measure that matter, not KPIs, measures that matter. What are the things that you should be measuring in your business that will allow you to make sure you're on the front foot, that you are driving your growth, but you're driving it in a smart way? So yes, you need to understand where you're going to be from a revenue perspective and what your goals and targets are, but you also need to be all over your profit line. What's a smarter business to have? Would you like to have a business that makes a £1 million in revenue but makes no profit? Or would you rather have a business that's turning over 500,000 but was making a net profit of £20,000 a year and making 100k profit? I know which business I'd rather have. So it's not about chasing revenue for the sake of revenue. However, there is a correlation between your revenue line and your profit and how you are delivering profitable revenue growth, which is the absolute focus. So you've got to be all over your profit metrics. Now, in some businesses, you might be talking gross profit, you might be talking your net profit. If you're more of a manufacturing business, you might talk about EBITDA, which is earnings before interest, tax, depreciation, amortization. Whatever your metrics, whatever you're focused on, make sure you have the metrics in your business that allow you to know what's your planned profit margin that you want to make and how are you tracking throughout the year. And finally, cash. Most businesses, in my experience, do not have a robust cash management strategy. And cash is king. Cash is the oxygen which feeds your business. So there's a number of metrics that you need to be all over. Number one, what's your debtor days, i.e. people that owe you money, and what's your creditor days? And making sure that your debtor days, you're getting money in faster than you need to be paying out your money to suppliers and partners that you are working with. And again, in my experience, most businesses are not measuring effectively the debtor-creditor ratio. The other thing that's really important from a cash perspective is that in your current account, you only keep in there what I call your free cash. It amazes me when you talk to business owners and go, oh, I've suddenly got a tax bill, or I've suddenly got a GST or a VAT bill that's suddenly come through. There are no surprises. You should be planning for those things. And if you keep your tax and your free cash in your current account, it creates a false expectation of what your real cash position is in your business. So always have two accounts. Your current account, which has got your free cash in it, and then an account where you siphon off any tax monies, VAT, GST that you owe, so that you are clear in terms of the liquidity and the free cash that you've got in order to grow your business. So there you have it. Revenue, profit, cash. There are our first 3 metrics. So the inside motorway lane is all about the proactive leadership of your cost base. And the worst time to look at your cost base is when you're in trouble, when your business is up against it, when you're not making margin, when the revenue lines aren't where they need to be, and you haven't got enough money to pay your salary bills and cover the overheads of the business. You should, as a minimum, be looking at your overheads on a quarterly basis. And this is about going through every single cost line that you've got, because it is amazing the marginal gains and marginal erosion that happens in your business. You've got a mobile phone that's stuffed in the drawer. You've got to plug into your website that you've not been using. You've got a subscription for $75 over here. And literally, when I do this exercise with clients, we will find a minimum of a 10-15% saving just by going through line by line the overheads and the cost base where there are things that they're just not using. Don't be reactive, be proactive in how you are analysing your cost base, and do it as a minimum on a quarterly basis in order to make sure that you are managing your overhead effectively. Then let's flip over to the outside lane, which is the fast lane. And the fast lane is all about top line, profitable revenue growth. And let me give you an example that really drives this home. I remember doing a piece of work with Trinity Mirror Group, who are the biggest producer of regional newspapers in the UK. And for 3 consecutive years, the CEO went to the city to report their performance, and their profits had gone up and the share price went down. Now, why did that happen? Because how they were growing their business was through cutting costs. What they weren't doing was demonstrating that they could deliver a top-line profitable revenue business. And the fast lane is all about how you focus on driving your top-line revenue sales, but making sure that it is profitable revenue that you are bringing in. That's about making sure you've got your pricing model right, that you understand how you make money, which are your products and services that are really contributing and adding value, which ones are costing you money. And again, in my experience, most business owners are not got the granular analysis of how they actually make money. Top line profitable revenue growth is what's happening in the outside lane. And then let's come to the middle motorway lane. This is the prize, this is the opportunity where you can impact really quickly. And economists will say that one of the challenges, particularly in the UK economy, is we are not productive, we're not optimized, we're not set up for success. So the middle lane is all about the productivity challenge. How can you make sure for every pound that you are spending, you're getting a return on the investment? And whether that return is a 2 times return, 5 times return, 10 times return. And every investment you're making in your business, how can you quantify and be conscious and deliberate about thinking about the return? So, for example, if you're doing Facebook advertising, you're spending £10, what is the return that you're going to get over time? If you're investing in a new salesperson, what's their break-even point? How long before they cover the costs of their salary? Is that 3 months? Is it 6 months? How long before they start to make money? And how long before you get to the minimum return that you want on a salesperson, which in any model is a minimum of 3 times the total cost that they're costing you as a business? So in that middle lane is about optimization. It's about leverage. It's about how you get productivity gains in everything that you're doing in your business, whether that's people capital, whether that's investment in marketing, whether that's investment in technology, whatever it might be, what's the returns that you're delivering? So there you have it, 6 fundamental growth levers. So the key actions that you can take away, let me summarize for you. So number 1, where do you want to be from a revenue perspective, and what are your goals for the next 2 or 3 years from a revenue perspective? How does that translate into your goals around your gross profit or your net profit that you want to make? And how are you going to be effective in really creating and managing a cash management strategy, recognizing that cash is king, cash is the oxygen that feeds your business, and the success is making sure that you've got cash flowing through your business. Then, in the slow lane, growth lever number 4, are you regularly, frequently, a minimum on a quarterly basis going to do reviews of your cost base to make sure that you haven't got hidden costs that are creeping in, that you are lean, that you're optimized, that you are set up for success? What are you doing in the fast lane with growth lever number 5 in order to drive your top line profitable revenue growth? And then finally with growth lever number 6, how can you optimize, drive the productivity, and make sure that every pound that you are investing in your business, you have a demonstrable return that you're getting over time in terms of the investment and the return that you're getting? So there you have it, 6 growth levers, practical things that you can instantly take away, apply to your business that will really help you to deliver 3 things: accelerated, sustained, and profitable business growth.